Good morning. Welcome to Mornings with Michael, the weekend edition, where we look at a longer range of possibilities. So we're going to start out with our word of the day. We're going to have our PowerPoint presentation. Then we'll go look at some stocks to watch. Right after our word of the day, we're going to look at the moving averages on the NASDAQ and the New York Exchange, and then come back and look at our spreadsheet. Our word of the day is chagrin. It's a noun, distress or embarrassment at having failed or been humiliated. Hopefully, none of you out there has anything to do with chagrin. So that is the story there. We're going to stop the share, go over to our charts. First, we're going to look at the NASDAQ. See if I can find it. I just had it here. Here we go. Here's the NASDAQ right here. As we can see, we're temporarily in the overbought condition. We'll see how much further it can go out. It looks pretty close to a breakout on the NASDAQ. We can just take a look at it on the QQQ here. It is in the blue shaded area, so it is breaking out. And let us go over to the New York. This is the New York Exchange. Just turned into overbought here. It was kind of even for a while. Turned into overbought. Composite index is turning up. So a lot of people are fretting about the markets right now. I think they're severely overbought, and we're going to go into a bear market. So we'll just have to keep our eyes open and let us go back. I'm going to go back to our share. So this is kind of the feeling that is out there. I'm going to pause the recording here. I wasn't sure if I had started the record or not, but our word of the day is chagrin. We looked at the New York and NASDAQ moving averages, and they are in overbought territory now. Interesting, this is the S&P 500 above its 200-day moving average. This is a 200-day moving average, and it's quite well extended. And here is a share of consumers expecting stock prices to rise over the next 12 months. It is the greatest number of people expecting that to happen in over since the 1980s. So to beat out, I believe this was 2018 right here. This is from Sticky Trades, AJ Monty. AJ Monty was the one who counseled the movie makers on trading places, where Eddie Murphy was one of the actors, and AJ Monty actually had a small role in that movie. So what you do, bullish, bearing, engulfing candle, you put a check mark on whichever box I believe it is, or bullish or bearish harami, hammer or shooting star, inverted hammer or hanging man, and stale green red light, volume up or down. We're going to go over this on another chart so you can see an example. 20-day moving average divergence. Gaps, the 80-20 rule, stochastics, CCI, and roll reversal. So that is how we use our 7-point trading checklist. And here we have one right here. So we have a big gap down right here. Why is this bullish? Well, it didn't stay down. It had a big bounce right here. So that is bullish. The following day, we have an bullish engulfing candle. We had a high volume here, but it didn't close on the low. The next day, green candle. It did pull back a couple of days, but then it shot back up. It tried to fill the gap. Didn't fill all of the gap, but it came pretty close. And right now we got, looks like a spinning top or a hanging man right here, which is slightly bearish. So that would be the end of the trade. And so right down here, turned into a bullish volume. You can see this red right here is higher volume, so you would think it would go down at least one more day, which it did, and then it came back up. And what you can tell right here, this is the stochastics, it's moving on up. So you would think that the averages would move up, and you got a confirmation in the CCI as well. So that's why we have all bullish indicators. And now we go over here. This is Dow Jones Industrial Average. It did move up higher. It was higher volume, so it's a great possibility it could continue higher on Monday. But look, we got a hinge right here on the stochastics. And we'll have to wait to see if we have a confirmation of a hinge in the CCI. This is from our friend AJ Monty, and he believes we're going to come down here and fill this gap. We've already filled this gap over here on this pullback. So the first gap it'll probably fill is this gap right over here at 477.15. So that is the initial pullback in the Dow Jones Industrial Average. Now we're going to go down to IWM. What we have here with IWM, we have a spinning top. It's undecisive, but usually can be bearish. Could be a turning point. It had been moving up, could be turning in a reverse action. We got a high bar here on the bearish turn here. We got a hinge on the stochastics, and it looks like we get a hinge on the CCI. So we got 1, 2, 3, 4 signals here that it's a possibility that it's going to reverse action. Mr. Monte thinks we may go down as far as 175.81. Right now it's at 210.96. 210.96 is where he believes it's going to take out this first gap up. So gaps, 80% of gaps fill. So we'll just have to wait and see. Now we're going to go to the NASDAQ, the QQQ. QQQ, feeling as a pullback is going to be 531.86. We got a spinning top, which is green, which is because it's above the 50% zone. It's still indecisive. It's a possibility that it's going to continue going up because we got a big bullish volume right over here. Volume and price mixed together makes it bullish. Although we do have a divergence, we got a hinge on the stochastics, and we've got a bigger hinge on the CCI indicator. So that is the story with the NASDAQ. And now we're going to go to the S&P 500. Got a very similar indicator, a little thicker body, but still could be indecisive. We got a higher volume, so good possibility that the market continues moving up on Monday. We do got a hinge on the stochastics, and it looks like a hinge has started on the CCI as well. So the first level would be to fill this gap here, which I believe is 620, and then come down to right here where this red kind of spinning top is right over here before it took off and started moving up. So that it would be our next level. So the levels on the NASDAQ are 532.17. The lower level is 417.67. And the first level for the S&P 500 is 600.20. And the lower level is 531.86. So there we have that. Here is the VIX. VIX 100%, not 80%, but 100% of gaps fill. It's an oscillating index, so eventually it'll fill. The first gap that would fill would be right here. Then we have another gap over here that would fill, and it looks like another gap here. So we got 3 or 4 gaps to fill on the VIX. So just going to come over here. What we have on the VIX is an inverted hammer. An inverted hammer is a bullish. If you see this at the top, it's a falling star and it's very bearish. But on the bottom of a long run of bearish trend, it is very bullish. So we have an inverted hammer here. We got a hinge started, it looks like, on the stochastics, and we definitely got a bend here on the CCI report. So the thing about the VIX, it's an inversion to the S&P 500. So if this goes up, the S&P 500 is going to sell off. So that is that on the VIX. And here's a closer look at the gap. I believe that's 1431 is that initial gap. And we can't say when it's going to happen, but it's 100% of the time it will happen. Now moving on, the stock market right now is climbing a wall of worry. There's a lot of worry out there. We got several wars going on. We got whether the Iran nuclear facility has been destroyed or not, and we still got tensions between them and Israel. They said they were going to get rid of Israel. That's why they were developing many thought that's why they're developing the nuclear weapon. So, and then we got Russia and the Ukraine fighting, and then we got pressure from China. So we got a lot of things going on in the world. The world stock market cap to global GDP ratio hit 117%. This value is higher than at the peak of the 2000 dot-com bubble, which is right over here. So the world stock markets have never been this expensive rated on this metric. So this is something definitely need to keep our eyes on. It is definitely a warning sign when we're at all-time highs. China continues to dump U.S. treasuries and buying gold at record levels. This is U.S. treasuries in the kind of silver blue area, and in the gold line is they're buying all the gold. So that's why the gold indexes have been going up. And a lot of other countries are doing the same thing. They don't want to hold our dollar reserves in the treasuries. US dollar now has lost more than 10% of its value this year. Its worst first half in almost 40 years. So anything that we're shipping in from other countries is going to cost us more. And whether our president thinks he's beat inflation and interest rates need to go down, there's going to be more inflation coming aboard there because there's the tariffs, and our money is losing value. And as a trader, you take the channel here, and if it breaks through on the bottom here, there's a good chance that you take the width of this channel and you bring it down over here, and it's a good chance that the dollar's value could fall the same width of this channel. So you need to continue to watch this. And July the 9th, the trade war is supposed to come back into focus. Trump says the deadline isn't a firm date whatsoever, but it is coming upon us shortly. And there's a lot of question marks about these tariffs. So much so that the futures on the S&P 500 fell quite a bit when they started thinking about this day. They did recover, but this is possibly the volatility that is yet to come. And we're going to come back for our quote of the day later. I'm going to stop our share right now, and we are going to go back to our charts. Take a look at some interesting stocks that are out there. I got my handy little sheet here. Nova Corporation provides online lending to customers in 37 states and Brazil. And look at this blue tower here. That's one big skyscraper. And look at the price move, up 5.17%. Here, you can just draw the line. Hit the wrong key, but there we go. Just kind of draw the line. Could actually have bought right here. And I'm going to just draw another line. Or you could buy right here. So it's still kind of in the buy area. 6% to the natural pivot. We got a big cup formation. Whether it forms a handle and comes back like this and then goes up like that is another question. But we got a lot of blue bars here, so there's a lot of buying that isn't your Aunt Edna. American Sports looks like it has a breakout. So it had breakout back here, gapped up on its earnings, 145% earnings increase, 75% earnings surprise. They're supplying a lot of the sporting goods to all those different teams out there. This is the old FANG stocks. It's starting to get a little extended. I wouldn't recommend buying it, but it's definitely something to keep on your radar. You can see there's a lot of blue bars coming into this. Toast, I actually have a buy-in for Monday morning. It's been working on this pattern. Its last earnings jumped way up. Tried to come up here. Is pulled back once, twice, and possibly third time is a charm. We got a lot of blue bars right over here, people buying. Amazon definitely had a breakout on Friday. Look at that huge power of blue, up 2.85%. Core Scientific, rumor is that it may be bought out by Core Weave, I believe it is. Core Weave, recent IPO. I guess they want to take advantage of stock price and purchase Core Scientific, which has a number of Bitcoin machines that they're making Bitcoin. SMH, you don't really want to worry about single stock risk. SMH may be a good place to place your bets. Another one is the SOX index. I believe there's a double. This is won 3 times the Philadelphia Semiconductor Index, but I think, and then this is the Pro Ultra Semiconductor, a double of the SMH. I just saw a report this morning that somebody was recommending you do a short an option call on coin and go long Bitcoin. So we'll just see if he felt like this was way overvalued, and he thinks that Bitcoin is undervalued. So if the inflation comes back and the devaluing of the dollar goes on, I would highly think that Bitcoin would go on a run. So this is Capital One Financial, part of the financial index. Looks like it's definitely breaking out into the pivot zone. Here's a look at the financial index. And then this is the other one, which is getting pretty close to breaking out as well. And here's one more that's in the financial index. Still needs to get above the 200-day moving average before it would look interesting. Looks like ARM is extending his arm, so to speak, on Friday. It's definitely getting close to being back to the old pivot. Got up there before, sold off, tried to again, sold off, tried again, and then really sold off. So it is risky. So that's all we're going to look at today. We are going to close our show out with the quote of the day. And our quote of the day, this comes from Mark Douglas, author of Trading in the Zone. The consistency you seek is in your mind, not in the markets. So if your mind is right, your portfolio should be right. So that's all for today. This has been Mornings with Michael for information and educational purposes only. If you have any questions, feel free to reach out to us and go out there and make a difference. Hope everybody is having a great, enjoyable weekend, and we will see you again on Monday.